let's welcome in Mr. Biju George, Director Shipbuilding, Mazagon Dock Shipbuilders. Mr. George, good having you. Thank you so much for taking the time out and speaking to us.
Thank you.
Could you tell us if this quarter panned out exactly as you anticipated, or what some of the line items like the provisions that have happened because of which the EBITDA got impacted were a surprise?
Yeah, the quantum of provisions came as a surprise. However, provision per se was not a surprise because it's in the offing. It's driven by the market conditions. It's driven by the shipbuilding boom, which presently our country is experiencing, as well as also the global boom in shipbuilding. And also contributing negatively to this is the emerging geopolitical scenario, where some of the, especially for export projects, where most of the equipment fit has to be sourced from NATO nations. And these are all contributed for increase in price of this equipment than vis-a-vis what we had estimated. And therefore, we have done a very conservative provisioning. So to ensure that no further provisioning would be required in the subsequent quarters, so that overall on a yearly basis, our revenue and profitability can be maintained and sustained in the levels it was anticipated.
Got it. So, and did I hear you say, at least Anushi was saying, that Q2 onwards, this surprise of provisioning or provisioning by itself, even if there the quantum would be minuscule or not there at all. So is the provision cat behind us, Mr. George?
Yeah, I would say provisioning is behind us, because that's why I told we have done a very conservative thing, because we have factored all the probabilities which are there, which can adversely impact the costing, and that has been already provisioned. So that in the coming quarters, this phenomenon is not going to repeat. Further, for ONGC projects, what we have observed is during monsoon, we are unable to execute it. We'll be able to revive the execution from post-September, and therefore H2 of this financial year would look better as more revenues will trickle down from the ONGC projects.
Got it. So we will not have provisioning measures issues per se. Forget the quantum being a surprise. I don't think it would be there in the first place. So that is one takeaway. And therefore, this margins being under pressure, you reckon those would normalize from Q2 itself too?
That's correct. So the pressure on the margins would get relieved from there in subsequent quarters.
Got it, sir. And I think what would just trying to understand, what could be a sustainable range? I mean, given that there are uncertainties, I know it's difficult to predict, but what could be, let's say, a ballpark sustainable range for margins, let's say, over the next 6 to 8 quarters, Mr. George?
So with the present data available and the way it is panning out, I can, a fair figure would be around 15% we would be able to sustain.
Okay, 15% is a safe assumption.
Yes.
It could be, of course, plus minus 100, 150 basis points, but largely a trend of 15%.
Largely, yes.
Got it, sir. Now, we know that order books are healthy. One question on whether there could be significant additions to the order book over the course of the next 9 months, Mr. George. And two is on execution, sir. Considering again the uncertainties around geopolitics, how do you see execution resulting into revenue growth for you for the rest of the year, arguably for the rest couple of years?
See, the execution per se is not affected by geopolitics, because most of the equipment have started coming in. So only, albeit with a higher price that I have already mentioned. So we intend to execute this project. So there is no, I don't see major issues pertaining to that. And the current order book is around 30,000 crores, which we intend to liquidate in the next coming 4 years by 2029. So at the same time, we are expecting there is a pipeline of orders which we are vying for, and that is whether that is going to materialize and when it is going to materialize is driven by government decisions, and we are waiting with crossed fingers for that because this is the additional submarine orders, the 675I orders. Then we are also a strong contender for next generation destroyers and also for the 17 Bravo project, which is the frigate program.
Got it. Uh, Sir, would love to know. So, despite the recent revenue growth being like 15 to 20%, I believe in the call you have said that the normalized growth could be 8 to 10%. In a high growth sector which is receiving orders, and now there is proof of concept for Indian defense industry per se, shipbuilding industry per se, why 8 to 10%? Is it, I mean, is there a reason why growth can't be faster or larger?
So, the growth depends on there should be a steady pipeline of order book and the nature of the work which we are executing are long gestation projects. That means the build period is long by the nature of the work itself. So those revenues will have to be recognized over a longer period of time, unlike a mass production industry. So these are the nuances of it's driven by the nature of the industry, I would say.
Okay. And therefore, despite the fact that your order backlog, right, potential order inflow, I believe you said, over the next 18 to 24 months is 2 to 2.5 lakh crores also possible, contingent on multiple things, of course. But even if that were to happen, sorry, I'm reading it out of the con call, right?
Yeah. See, that would be a very optimistic figure.
Blue sky scenario. Okay.
Yeah. So that is if everything are aligned in favor of us.
Got it. But let's work with an assumption, sir, that if everything is aligned and if you do get that kind of an order inflow or 10, 15, 20% lower, let's assume, order inflow, would you still believe that growth rates would be 8 to 10% or could they be higher?
Then if everything is aligned in our favor, it can be more. But at this point, we are unable to speculate on how it is going to pan out.
Okay. Okay.
So we have the capacity, we have the capability, we are on the cusp of the learning curve to receive more orders. So therefore, we are fairly optimistic. A good portion of this pie would come to us.
Okay. You have done a fair degree of Capex already, Mr. George. I believe on the call you said that there are no immediate plans for debt as well because the balance sheet is healthy. If you indeed continue on this 8 to 10% growth number, would you need to do any kind of equity fundraise at all for the next 3 to 5 years? Or would you be fine with internal accruals and cash flows?
So with the internal accruals, we would be able to manage the capex with also the profit also getting accrued further. So and this capex is not a one-time spend; it's also spread over 3-4 years because there is civil works involved. These projects are also of long gestation projects, so it will also be spread out. The outflow will also be spread out in a matter of 5 to 6 years.
Yeah, of course. So, but you would not need to do any kind of equity fundraise to execute that kind of growth, I presume, right?
As of now, we are not looking at that.
Okay, but if growth were to pick up, then you might think of it as of.
If the growth has to further expanded, at that time we can consider that.
I have one final question, sir. And that is, I think, on the Ministry of Shipping plans, right, for 4 large shipbuilding clusters, I believe you are open to tie-ups with multiple global players as well. Give us the sense of what does such a plan entail? I mean, does it bring in newer global technologies? Does it help you share your learnings with global companies as well? Does it expand order books and scope for business? Tell us a bit about it.
This is part of the mission Amritkal 2047 of the Government of India. The shipbuilding clusters is an imperative for a maritime nation like us, and there is a full government support for that. And we are also looking at the various options that are available. Right now, it's in a very rudimentary stage. I am unable to give any clear picture because still we are, it's even broad contours of that are not clear to us how we have to go about that. But we are looking at that very carefully as well as seriously.
Got it, sir. Okay. Wishing you all the best for that and more. Thank you so much for taking the time out and being with us today.
Yeah, thank you. Thank you, sir.